Welcome back. Today is 6th January 2025. I am Pratap here. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. You might be knowing the cost of the training is over 8,000 US dollars. And this is a complete free training. And you can access all the training lessons at our NeoStock homepage. At our homepage, click on the tab post. You get access to this post. And this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new video, we will update at our Telegram channel. Okay, now let's get into the analysis discussion. I think today is like a Black Friday for HLQ zone traders. All the trades are stopped out except one, and that one is 1:3 RR achieved. Okay, we will discuss the first one is Havels. Havels is having a stopped out trade and also reached 1:3 RR. That is the one that is reached is a bear trap trade. It's not a fine tuned, it is a bear trap. Below the zone, we have a 15-minute zone. From there, we have a fine tuned zone that gave a bear trap trade to achieve 1:3. That's it. Nothing more than that. After that, even that bear trap is also violated. It looks like a bear trap, maybe it is not. That's why this is completely violated. If it is seriously a bear trap, it would have pushed the prices into the zone. And price would have been closed inside the zone. That didn't happen. Okay. But sometimes we guess, but good thing is these kind of bear trap cases, at least it will give 1:3 RR in most of the scenarios. That is what happened today. Okay, Havels, this is a 75 minutes high liquidity zone. We have a drop, one base candle and medium size leg part of the base. Actually imbalance started from this candle. And after that prices further moved. So that way we have drawn this 75 minutes demand zone. And this is fine tuned with 15 minutes time frame. In the 15 minutes, you have multiple order flows. We have a 15 minutes order flow rally, 3 base candles and a rally. And we have another one drop, 3 base candles and rally. And below we have rally, base, rally. Maybe this may work as a bear trap because it is having a multiple test it is supporting. So that could be one of the reasons. And also if you think this is a drop, base, rally having a LOTL zone. And this is also like a horizon to the 75. So by considering this also, this zone may work as an horizon, may work. But that didn't happen today. But good thing is it gave 1:3 RR. This is the only one trade we got today, successful. Okay. And this again fine tuned with 5 minutes time frame. This zone is not having any 5-minute zones, proper zones. All this, easily this zone will be violated. That is what happened. Here we have a rally, base, rally, a fine tuned 5-minute zone. And this one is stopped out today. And next we have this 15 minutes bear trap. What we thought it could be a bear trap. So this is having a drop base rally. And see, it is already tested, and again drop base rally created, again drop multiple base candles, but here a rally candle is created. But here rally base rally is also there. But this is the one, the main origin for all these order flows. Origin is the main area you need to identify. Origin means it's not the lesson 22 origin I am talking about. That is LTF origin for HTF. This is the normal general English origin. Origin means the main source from where actual orders, all these zones are getting picked up. That is the area you have to plan the trades. Exactly that is the area today you see. Prices entered, market is sharply going down today, but this is the area stopped and pushed the prices up to 1:3 RR. Here a 5-minute zone is there, drop base drop 1:3 RR. Probably institutions might have kept a very strong order flow in this area. And the moment it entered, see how it pushed the prices and entered this bear trap. What we thought a bear trap is completely violated. But by the time it reached this 5-minute zone, it achieved 1:3 RR, exactly 1:3 RR it achieved. So this is the only one successful trade. Okay. Havels, the one that is stopped out, you would have got 525 rupees loss, and it is minus 0.4% negative ROI as per one futures margin cost. But the 1:3 RR trade, it has given 6,255 rupees profit, which is a 4.2%. I think I made a mistake. It's not minus, plus. This is a 4.2% ROI. This is the only successful. And a couple of trades we missed narrowly, that also we discussed. Otherwise, we would have got a very good profits. Okay, this is about Havels. So next one is a CUB, City Union Bank. This is also a 75 minutes high liquidity zone. It's a drop, 2 base candles and rally, follow through candles. This is what suggested by our software, but this 5-minute zone is again violated today. 15-minute zone. See here you have a drop candle, 2 base candles, rally and follow through candles. Drop, base, rally. This is the 15-minute zone. You may say here also we can draw a 15-minute zone. Rally, base, rally. It's going out of the zone. Have you noticed the base candles are going out of the zone? Okay, still we can draw, but fine-tuned zone is completely outside the zone. That's why I just ignored this one. In case if you consider, see where is the fine-tuned zone. It should be part of the zone, or at least overlap at the distal line. Go to the 5 minutes time frame. You have a rally, base, rally. Maybe if you draw this rally, base, rally, this is already tested and violated this one. That's why I didn't consider. This one is violated. I mean, pierced. So this is the reason why I did not consider this. And here all these base candles, there is no order flow inside the zone. And if you draw, this is completely outside the zone. At least it should have to consider. Most of the time, see, we take entries at the proximal line. If I say distal line, kindly excuse me, proximal line. At least it should overlap at the proximal line. If it overlaps, at least at proximal line we take entries. Now this zone, fine-tuned zone, is going completely out of the zone. It is quite risky taking such kind of trades. So that is the reason why I didn't go for this 15-minute zone. And here you have 5-minute zone. Here I have some kind of concern while drawing this zone. I am not really comfortable with this zone because you see drop 1, 2, 3, 4, 5, 6, 7 base candles. If you consider this as a small candle, small candles, even if it is 50%, if it is having more than 50% body, still part of the zone. Even 90% body, still part of the zone. Okay, but in case if you consider this as a medium size candle, then it could be a leg-in. Then drop 3 base candles and rally. Finally, I gave importance to this one, leg-in. I consider it as medium. Initially, I thought whether it should consider as a medium or small. If it is small, we can't draw this zone because more than 6 base candles, 7 base candles. That's why this is not a valid. But anyway, with the doubtful only, I have drawn this zone. This is drop base drop, but it is violated. Maybe my understanding is wrong here. Maybe it could be a drop 7 base candles and rally. That's why easily violated. But anyway, because I am convinced with this drop base rally, I have to register this as a stopped out trade. So that way cub. See, rarely you see such kind of zones, but okay, it happened. So minus, that is the 1400 rupees loss you would have got. So on your investment, you would have got 0.8% negative ROI. Cub. Next one is Apollo Hospitals. Sorry, Apollo Tires, not Apollo Tires, not hospitals. Sorry for my mistake. It is Apollo Tires. This is also a 75 minutes high liquidity zone. How it is identified? A rally, 1, 2, 3, 4 base candles and a rally candle. Rally base rally. Okay. And it is having 3 fine-tuned orders, but one is not valid because one order flow is already tested. Remaining 2 we need to consider. So go to the 15 minutes time frame. In the 15 minutes time frame, here you have drop base candle rally, drop base rally. The second one is rally, 2 base candles and rally. And third one is the origin, 5 minutes origin. It is not the 15 minute zone. This is the 5 minutes origin. To this entire 75 minutes daily zone. 75 minutes high liquidity zone. Okay, this is the 15 minutes. We have drawn 2 order flows at 15 minutes. The third one is a 5 minutes origin, not 15 minutes fine-tuned zone. Okay, now I'm going to the 5 minutes time frame. In the 5 minutes time frame, this is a drop candle, leg-in, 1, 2, 3, 4, 5 base candles. If this is the small candle, if this is the small candle, part of the base. Suppose if you consider this is the medium size candle, okay, this is the leg-in, you have 1, 2, 3, 4 base candles and a rally candle. Either way, it doesn't make any difference. The zone remains same, the 5 minute zone. Sorry, I made a mistake. Here you have this I considered as a failed ERC, as a rally. Then these 2 are the base candles and this is the leg out. That way I consider. This is the leg-in, 2 base candles and rally. Otherwise, entire 15 minute zone would have been this entire 5 minute zone. Okay. Previously, prices came very close to the zone. Type 1 proximal is tested. See, type 1 is tested, but type 2 proximal is not tested. High liquidity zones, the type 2 is not tested, type 2 proximal is not tested unless type 1 and type 2 are very close. But otherwise, many times type 2 trade will be working very well. I think type 2 is also tested, just touched. Maybe that is the reason why I would have considered this trade as a valid trade. Just touched many times. Next time also it will work, and moreover, you see, it's a strong rejection. Definitely, this will be a good trade from this zone. And moreover, this is a morning 9:15 candle. Probably that touch, definitely, we can ignore that. So that's why I'm consider this as a valid zone for making a trade, but unfortunately, it is violated. Sometime it gave some kind of resistance to hold the prices. It resisted for some time, but the supply is very strong. Here, see here, imbalance took place here. Drop 1, 2, 3, 4 base candles. Drop, some imbalance took place here. Probably this is the area institutions might have added a huge demand. Supply, and this entire demand is wiped out. So that way this is violated. So we have to accept this. No other option. This is a stopped out trade. And according to me, this is not a tested zone, the type 2. It looks like just touched, but okay, that is acceptable. Today it is stopped out, but many times such kind of trades work very well. Just because of today's price action, you should not change your perception in understanding these price actions. Today is a bad luck. Okay, we have to accept, because maybe supply is very strong. All these demands are violated. Rarely it happens. This is the second time happened. We got more stopped out trades in the last 1.5 years. Because we've been monitoring since for the last means 2003 September onwards. Almost 1 year, 4 months we completed. September, October, November, December. 4 months and 1 year. 1 year plus 4 months extra. So within almost close to 1.5 years, say. So within this 1.5 year, this is the second time happened. More stopped out trades. That's okay. We have to accept. That month only, HLQ zone performance, we got 79%. That is the only month during the last 14 months, our HLQ zone's performance is less than 80%. Just 1% less that month. Let us see what will happen this January. Okay, what about the next one? Next one is a high liquidity zone. Drop, base, rally. Tested once, tested second times. Mostly I would not have considered. 1 or 2 tests will not consider as a high liquidity zone. But why I am assuming this is a high liquidity? See here, drop base rally is created. Again here also drop base rally is created. When happen such kind of situations? Many times these LOTL situations you will see in high liquidity zones. Many times, at least more than 80% we can say. Only 20% scenario it may not be high liquidity zone. So that's why there is nothing wrong in planning a trade in this zone. Your third trade definitely you can plan. Because it is a high liquidity zone, definitely we can plan. Because we might have enjoyed earlier trades. But today what happened? See here also again drop base rally is created. But unfortunately, this is in this area, see, so much of time. There was a big fight. See, this is a fight between institutions to institutions. Some institutions wants to buy, some institutions wants to sell. Finally, who will win the game? Finally, who will win the game? I'm sure this trade you won't get any loss in this trade. See here you have a drop, base, drop with hidden body. At the hidden body, with again a drop candle is created. So definitely, maybe rally, base, drop, sorry. This you can consider a medium size rally, base, drop with the hidden body. So definitely this could be your new zone, and moreover here you have a gap is also there. Because of this gap, definitely you have to exit. At least this is the area we would exit it. Because this is a concerned area. You took the trade and immediately you might have exited the trade in the next when it reached. Go to 5 minutes, you get clarity. Sorry, let me change the color. We have to exit after you, because by this time already you took the trade. And moreover, price is slightly pierced. Have you noticed? And here you have a strong supply zone with gap is there. You must exit. Of course, you won't get the profit. At least you would have exited by collecting the taxes. You get a small profit. Maybe on one lot you may get some 200 or 300 rupees profit you would have got. That profit is good enough for paying the taxes per our brokerage charges and our security transaction charges, whatever charges are there. Probably you would have collected that charges. In case if anybody taken, this is the area you have to exit. There is no other option for you. Institutions wants to violate this zone. They created a zone, but not good enough. This is how strongly it holded. After that, there was a fight. A lot of fight happened between institutions. But this itself is an indication the zone is pierced here. But with pierced zone they created. But here my concern is 15-minute zone is also pierced. If 15-minute zone is not pierced, then it is a different story. Maybe we would have held it. We might have thought this zone will violate. But 15 minutes, did they create a zone? No. Go to the 15 minutes. There is no 15-minute zone here. You can't fight 5-minute zone with 15 minutes against a 15-minute zone. So that's why when you get the opportunity, we must exit. A lot of fight happened. Finally, this entire zone is violated. But at least you would have collected your taxes if you exit here. If you don't notice this zone, probably you might have hit your stop loss. Anyway, this is for HLQ traders who take multiple trades. Those who don't take tested zone trades, you need not worry about this. Anyway, this is forget about the second one. Third one, again a clear loss for us. Why? Because this is the drop base rally. This is a LTF zone as an horizon to this entire 75-minute zone. Drop base rally, tested, again tested. This time it picked up the orders and then started moving. And finally a big move. And first time it is enter into this horizon after this big move. So definitely we will plan a trade in this 5-minute zone because we got a lot of success. Almost 90% success rate we have seen in LTF zone as an horizon. Even though we are claiming 80% success rate, but these zones gave a lot of success. Rarely we see a failure. Today it happened. Today it is stopped out. But before it stopped out, this is also you see. Sometime it is trying to hold the prices. Slightly pierced here. Once it is pierced, this could be within your stop buffer. And gave some move, not good enough. I think it has given some 1:2 close to 1:2 RR, I think, up to here. If it is 1:3 RR, we would have considered it is a successful trade. Because it is stopped out, if anybody would have exited a little, stopped out means pierced. If anybody would have exited your trade a little before, at least you saved some of the money, a little profit at least you would have got. But we have seen many times the zone will be pierced and after that prices move very short and it will reach even 15 minutes target. Many times we have seen. That way also we think. That way if we think we will hold. But after that again it reversed and came down and finally it is violated. Okay, for performance point of view it did not achieve 1:3. So it's a failure trade. It is a stopped out trade. So far as the two trades, two stopped out trades from Apollo test, this is the first one and the LTF zone is the second one. Lower time frame zone as an origin. Both give exactly same losses, 1%. Let me make a note. This is a 5-minute LTF zone. $75 minutes HLQ zone. Okay. So these are the trades. We covered everything. Apollo Tyres, Cub and Havels. Yes. And a couple of trades narrowly we missed. Otherwise we would have got good trades. The first one is Syngen. Syngen, you know where it is? It is inside the pierced zone. Even yesterday also, when I released the video, lesson 28, I explained about this particular stock, Syngen, in that video also. But I removed this analysis because I don't want to mix HLQ analysis in the training videos. That's why I deleted this analysis. But we discussed this analysis on 1st January. 1st January I explained the 75-minute zone. This drop, 2 base candles and a rally. Failed ERC candle as used as a leg-in. After that it picked up and order flows are created. Our software identified it as a drop base rally. This is the 75 minutes high liquidity zone. And this 75 minutes high liquidity zone is inside the pierced zone. This daily zone is a pierced zone. Yesterday we discussed this scenario. And also yesterday I talked about this 75 minute zone, high liquidity zone. In that video, please refer that. Lesson 28. We discussed the Syngen. Even I have given timestamps in that video description also, even in the comment section also in the video. Click the Syngen timestamp, directly will go to that discussion in lesson 28. See, those order flows are working very strong. See, today all the zones are violated just like that, but this zone is holding the prices. You may say this is already a fine-tuned zone is stopped out. But on 1st January video, 1st January HLQ zone analysis video, I told you not to take trade in this zone because this 5-minute zone is a tested zone. Anyway, you will see that. Already we analyzed this stock on 1st January 2025. If you listened 1st January video, we discussed about all these order flows and we identified this fine-tuned 5-minute zone is a tested zone. That's why I suggested it is a test. Clearly I mentioned the word. It is a tested zone. Unless it is a high liquidity zone, we cannot take the trade, second trade, because it is clearly type 2 is tested. But our plan is on this 5-minute zone as an origin to this entire 75-minute zone. This whole setup is inside the daily zone. Go to the daily time frame. We have a drop 1, 2, 3, 4 base candle, 1, 2, 3, 4, 5 base candles and a rally candle, and this zone is pierced. Before it pierced, this bear trap area has been tested multiple times. This is the one and this is the second, and this time it didn't come close to this, but it picked up the orders from this the 75 minutes bear trap. This is the 75 minutes bear trap. But this is the fine-tuned 5-minute zone. There is no rule that you have to take the trade from the fine-tuned 5-minute zone. Who will take a fine-tuned 5-minute zone trades? Intraday traders will take. If you are a short-term trader or if you are a swing trader, you may not be taking trades at fine-tuned 5-minute zone. Fine-tuned 5-minute zone is only a reference that institutional order flow is there in that zone. Many times what happens in the swing trades, your prices may not reach up to the fine-tuned 5-minute zones. After some time, prices will be reaching. That's why you will be taking your trades at either 15-minute zone, or if risk is within your accepted limit, type 2 proximal entry of 75 or 15-minute zone. I think this is not 75-minute zone, this is a 15-minute zone. Please correct me. Oh, sorry, we are in the daily time frame. This is 15-minute zone only. Sorry, 75-minute zone only. See here. So this is a 75-minute zone. People, how they take, if the risk is within your accepted limit, you take type 2 proximal level. That way people will be planning the trades. If risk is high, then we go to the 15 minutes, there we take the trade. If 15 minutes also risk high, type 2 15 minutes people will take. If that risk is also high, then we go to the fine-tuned 5-minute zone. That way people will be planning their trades. Why that way people will plan? Because they have a fear of missing the trade. They believe price may not reach up to the fine-tuned 5-minute zone. Before itself it will be started moving up. With that fear, people will be taking trades before prices reaching into the fine-tuned 5-minute zones. That's why many times you see price may not reach up to the fine-tuned 5-minute zone. But our HLQ zones, we have to wait. How many trades we missed so far? Prices entered into the HLQ zone but did not reach a fine-tuned 5-minute zone. Several trades we missed. But still we are getting few trades every time they are reaching up to fine-tuned 5 minutes time frame. We don't bother about all the stocks. We have 6 or 7 HLQ zones. One trade is enough for us in a day. We don't want trades from 2 stocks or 3 stocks. One good trade from one zone is more than enough for us. So all these days what you have seen, at least one stock minimum, prices are reaching fine-tuned 5 minutes areas. That area if you take a trade, intraday trade, you get profits. Otherwise you won't get any RR. Just to achieve RR. So that is the reason why, for the short-term traders' point of view, this is also a successful trade, even though it did not reach. It reached the 75-minute zone and see the push. It gave a very big push. It could have been our swing trade. Again, this is also, see, came very close to the zone. Maybe 15 minutes or fine-tuned 5 minutes, we would have taken a trade. It gave a move. Maybe it will move further. Before that, swings ups and downs will be there. See, today I have drawn the blue color line, that is our entry with the entry buffer, but narrowly we missed. What is the low of this candle? Low of this candle is 842.15 paisa. 842.50 paisa minus, and the blue color line it is 841.55. 95 rupees paisa. If the price would have come down by another 95 paisa, not 95 rupees, sorry, another 95 paisa if prices would have come down, we would have taken this trade. Our trade would have been executed. And after that, see the profit. Huge profit it has given. Very big profit. Until this rally base drop, the 75-minute zone. But we can't consider this as a base candle. This is a fail. Definitely somewhere here some 15-minute zone might be there. Maybe here you have a 15-minute zone. Till here it reached. Drop, base, drop. This is acting as a high liquidity zone because of it is first time tested, second time tested. Now it is violated. Slightly pierced, not violated, slightly pierced. That's it. After that, again it came down. Again, same pierced area it came, again came down. So this is the area working as a high liquidity area. Sorry, this one is violated. This is not a zone because this is not a great leg out candle. It is a medium size candle. So that's why this is a leg. So this one is violated. Here it is violated. And how much profit? A very big profit you would have got. But narrowly with 95 paisa difference, we missed the trade. That too in a bearish day. Today is a bearish day. See how many trades are stopped out. But still this zone worked. Why? Magic. What is the magic? Pierced zones has done the magic. Pierced zones, generally according to us, pierced zones are waste zones, right? All these days we might have thought like that. But yesterday in HLQ zone, in our lesson 28, yesterday you all realized it. All of a sudden HLQ zones is like a hero. It is looking like. It is like a savior for us, giving a lot of profits. How many zones we analyzed yesterday? Several zones. All zones are identified by our software. Nearly 7 or 8 stocks. Still some more stocks also we can analyze, but I left it. HDFC Life is also there. That also gave good profits, but I didn't analyze that stock. In the leftover stocks, few stocks. I thought that is good enough because that itself 2.5 hours time it took for recording the video with all those examples. But it's worth. Listening the 2.5 hours is really worth for us. When a concept is giving a lot of money, why do we want to miss the topic, right? Okay, this is about Shenzhen. Why it was bullish even though market is bearish? Because this is the zone having a strong institutional order flow. From the 15-minute zone, the move happened from 15-minute zone. For our HLQ zone trades point of view, okay, but short-term traders would have taken a trade here in this. They would have got a trade, short-term traders. You got an entry here. Why 15 minutes entry, you see? This is the 15 minutes entry. This is your entry. 841.90 paisa. Add some entry buffer. 841.90 paisa into 0.1 divided by 100. This is the buffer you can add. You can add 85 paisa buffer, you can add 85 paisa. So plus your entry, I mean the proximal line, 841.90. You are getting 842.75 paisa. 842.75 paisa, you keep the entry buffer. Now draw the horizontal line. What is the value? 842.75. Exactly, this is the one. See, 842.75 paisa. Did you get the entry? Yes, 15 minutes entry you got. You already 15, even if 15 minutes short-term traders, maybe you might have holded. Maybe somewhere in the 75-minute zone, when it reach, probably you may exit. Probably this rally, 2 base candles and drop. This could be your target. Maybe tomorrow it may reach this target. For short-term traders' point of view. Maybe tomorrow or day after tomorrow, it may few days before reaching. But we intraday traders missed this trade because slightly we missed. Our trade is the second blue color line. It couldn't reach. So this is the power of the pierced zones, the new order flows. Which category this concept comes under? I explained several strategies. Pierced zone strategies. The third strategy comes under, comes under third strategy. First strategy, you land up bull or bear traps. Second strategy, you land LTF zone as an horizon. Third strategy, you land new order flows within the pierced zone. All these things comes under the 75 minutes high liquidity zone, comes under new category. Actually, the 75 minute zone is inside the daily pierced zone. Because our software has given, we looked into this zone, but actually this is inside the daily pierced zone. Even though today is a bearish day, but it pushed the prices. It gave a very big push. When the push started at 10:30 candle, 10:30 75 minutes candle. Sometime it went down, and after that, the moment it reached this order flow, sharply prices came up. Because this is a 15 minutes lower time frame zone horizon to the 75 minutes. Remember, this is not the 5 minutes horizon. 5 minutes is only a fine-tuned area. This is the 15 minutes horizon. And the trade is a 15 minute zone trade. From this 75 minutes. Because why we are keeping the 75 minute zone as a target? Because the entry is taken from 75 minute zone. Obviously, target will be up to the 75 minute zone. So 15 minutes entry is a short term traders. That is like it is like your DIT trade, daily income trade. Of course, it is not a bullish trade setup trade. It is a high liquidity zone strategy trade. But intraday we close. That is, remember, intraday trades we have to close intraday only. Intraday trades we have to take at fine-tuned 5 minutes only. There is no other option. Otherwise, risk management is very, very, very difficult. Here 15 minutes also risk is within your accepted limit, because 5 minutes and 15 minutes there is no much difference, very small. That's why you will get within 2% risk area. Sometimes if you don't get 2% risk area, what you do, you have two options. You have to go a little deep inside and you have to take a trade, or you have to take, without going deep, you have to take position sizing and you can take the trade. You should not forget all these techniques. Okay, this is about Shenzhen, and remaining stocks are daily zones, that is Atul and LTF. First let us, Atul, LTF and PNB are daily trades. Atul is a daily demand zone. Atul is having a fine-tuned zone and also having a 1 minute zone. Already we discussed Atul previously. Atul is having 1 minute high liquidity zone. First let me go to the 75. This is the one previously discussed. Just want to show you, we have a fine-tuned zone, we missed. And all these things we discussed earlier. Please remember the old, I didn't remember which day I explained this Atul, but look into the old HLQ analysis. This analysis is from the previously only. We have a 75 minute zone. At 75 minutes, we have a 15 minutes horizon is available, I think. 15 minutes horizon or 15 minutes fine-tuned? No, not horizon, fine-tuned zone only. Drop base rally. This is within the zone only. And then we have a fine-tuned 5 minute zone in the 5 minutes area. All these things I already explained to you. And here there is no proper 5 minute zone. That's why we have drawn a 3 minute zone here. Now hope you might have remembered. We have drawn 3 minute zone, that is a high liquidity zone. Five minutes is not clear. See here we have drawn a 3 minutes rally, base rally. This has been tested several times. This is a 3 minutes high liquidity zone. See, tested second time and with sharp rejections. That's why we want to plan our trade again in this area. And after that, this 1 minute zone is holding the prices. Here we have 1 minute zone. Of course, this is also 3 minutes. 1 minute is also there. This is also 3 minutes. Drop, base, rally. Here you have 1 minute is also there. But anyway, I have drawn 3 minutes. This is the one currently holding the prices. First test, second test, third. Okay. And today third time. Today also it just went deep, almost just touched the distal line or a little below, and then again it moved up. But it is not good enough to get 1:3 RR. If anybody would have taken this HLQ trade today, it is stopped out. It got the expiry period. 3 minutes and 1 minute high liquidity zones will be having less time compared to the 5 minutes time. But already it gave good trades. Today also it was trying to hold, but not good enough. Order flow might be there. It couldn't push up to 1:5 RR. I think it has given 1:2.2 or 2.3 RR. It has given up to here. And here a supply zone is there that strongly pushed the prices down. Today 5 minute zones work. They are work like anything. They control the high liquidity zones today. That means today supply is such a strong. This 5 minute supply zone, see how it pushed and finally it is violated. So any HLQ zone traders would have taken the trade today, it would have been stopped out. But anyway, we can't consider this because already it gave 2 profits. Even though whether you take or not, high liquidity zone performance point I am telling. Our individual trades point of view, if we take a trade, it is a stopped out trade because we already got some money loss. But performance point of view, the zone worked very well so far. Okay, then prices, see, they were not exactly in the 5 minutes area. Here also see, if you keep entry buffer for 15 minute zone, your trade would have been executed. But that is for short term traders. But we high liquidity zone traders, we have to keep entry buffer only for fine tuned 5 minute zone. That way your trade would not have been executed. But anyway, this is the last 15 minutes price action. We don't really concern much about this. Next one is the LTF. This is a 75 minute, daily high liquidity supply zone. We have a rally base drop. L&T Finance. And today we didn't get any trade from this zone. This is fine tuned with 75 minutes time frame. Here we have a drop, 2-3 base candles and a drop, the 15 minutes, 75 minutes area. Next 15 minutes, here I have a drop, base drop, 15 minute zone. Rally base drop, not drop. Rally, 2 base candles and a drop. And then 5 minutes fine tuned zone. Here is a 5 minute zone, drop, base, drop. This is the fine tune. So we didn't get a trade today. Next one is PNB. PNB is also daily high liquidity supply zone. This is also we did not get the trade. Here we have rally base drop. Failed ERC rally base drop. This one is fine tuned with 75 minutes time frame. Sorry, something wrong. Let me go back again. Some mistake. Sorry. This is rally base drop. Yeah, this is what correctly we discussed. Rally base drop. But 75 minute zone is from here. 75 minute zone is an horizon to this daily zone. Daily order flow is not good. At 75, this rally base This leg out I am not convinced. So many base candles you are getting. So that's why I didn't draw anything here. This is the area will be easily violated. But here, lower time frame zone, which time frame? 75 minutes. Drop 2 base candles and a drop and tested and then again came down. Now up to this fine-tuned level, 5 minutes level prices went and then it pushed the prices down. So this is the area we can bet. This 75 minute zone as an horizon to the daily high liquidity supply zone. Okay, now within this 75 minutes horizon, we should go for a fine-tuned 5 minute zone because our trades are from fine-tuned 5 minute zones. So here you have, I consider this as a drop candle and 1, 2, 3 base candles and a drop candle, this 15 minutes. Of course, 15 minute structure is not great, but it is like compromised and drawn this. For our interest is on the fine-tuned 5 minutes. So go to the 5 minutes. If order flow is not good, that means 15 minute structure is not good. If order flow is good, okay, whatever the 15 minute structure, maybe that is a good area. That way we can consider. This is the one, a rally candle failed ERC, not really, again. We have 2 base candles. Actually, this is the base candle, but this is a medium size part of the base and drop. You may ask a question, these candles also looking very big. Sorry, I have considered this one is a leg in, not this one. This one I considered as a base only. This is a drop. This is the base candle. And again another 2 candles and drop. These candles are looking big. What I did, see the other candles also, they are big, very big. Compared to all these other candles, these are all medium. So that's why I consider this is part of the base. So here you see all these candles are very big candles. Compared to these very big candles, these are the small candles. I mean medium size candles. That's why this is a medium size, all part of the base. Even if you consider both these candles are medium size leg candles, yes, you have a medium size base, these 2 part of the base. Even if you think like that. So that's why here I consider this as a fine-tuned 5 minutes area. From here it picked up the orders. Not only that, you see rally base drop is created again. So definitely this is the area we get some trade opportunity. And risk is also small. If anyone is having concern, you can leave this. But okay, I'm hoping this is the area will give a trade. But anyway, today we did not get any trade on this. So these are the high liquidity zones from our previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.